The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, there is trouble in River City. They're having some really serious problems in Saudi Arabia, folks. This is really big. These guys that are getting arrested are their relatives of the people that are arresting them. So there's something's going. My guess is that the populace is finally getting tired of the old king taking all the money. That's my guess, but who knows? But this is a big deal. And I'm sure you've seen, Prince Alweed on CNBC. He was on there all the time. And he's under house arrest, too. Now, they're in the Ritz-Carlton governmental prison. And, boy, folks, let me tell you, the Ritz-Carlton in Saudi Arabia is not some place you want to go to. I mean, it is really rough in there. You sometimes have to wait 5 to 10 minutes for room service. I mean, it's really bad over there. So you don't want to go. I mean, it's just too much. It's almost like the Ritz-Carlton in Hong Kong. It's on the 100th to 114th floor. In the I can't remember the name of the building right on the South China Sea. It is it sells. I think the rates are about 800 to 1,000 a night, and they're booked like a year in advance. Forget about November, December trying to get a room there. It's nearly impossible. But pretty tough way to live. It's almost like the Yuma Territorial Prison. All right, let's get on with the show here. I've started out with the DAX, as you can see. We're still making those big, we got a caller in. Shut the front door and raise the rent from New Jersey. Victor, are you there?
Yeah, how you doing? Before I go in big, just hear me out. I'm looking at Fibonacci retracements on AT&T. So how many years should I go back? 3 years, 4 years? Because we're at like a 0.382 on it. I was thinking about buying some for the divvy. It pays 50 cents. You know what I mean? Is it going to break that? You take a look. Can you put a chart up and take a look at it?
I can do that, but it'll have to be in just a minute or two. But
you
answered.
I just want to know, and where do you think it breaks
I will put it up. I will put it up for you, Victor. Yeah, well, here's your. It's really simple. If you buy at the 0.382, if it goes 5% below that, in other words, don't risk more than 3 to 5%. What does AT&T sell for now?
33.30.
Okay, so 5%. That's 5%. Yeah, 5% of that is $1.50. So
take a look at it and tell me where you would buy it.
I will do that. In fact, let me see if I can do it now since I've got you on the air. You still getting a lot of rain back there?
Yeah, it's raining, but I'm looking at which I go back 3 years, 2 years,
3 years,
or
3
4
years. 3 years is plenty. What's the symbol for AT&T? I don't even know anymore.
Used to be T. The letter T.
Ah, it still is. Okay, let me. I haven't looked at a chart on this.
Yeah, because each one of them, the 0.50 is like one of them is 31.96, the other one's 32.89, and last week's low was 32.80, like 93.
Well, the answer to your question is that you don't have to risk more than 3%, 5% at the very most. So 5% of a $32 stock is roughly $1.50. So you wouldn't have to risk any more. Here, I think I have it right now. Let's just get it up here. And, it's making a big 3 drive down here. Yeah, this is not a bad. Let me put the weekly up here, and then we'll.
Put those things on, those little circles, it looks like it's bottoming out every time this time of the year because it pays its dividend again in like 2 months.
This is good. Let me get the daily up. The weekly doesn't go back far enough, but the daily certainly does. Yeah, this is not a bad.
You use weeklies when you do fib retracement, not daily.
No. You can do fib retracement on a 2-minute chart if you wanted to, but you're down here. This is not a bad deal, and the reason why. Let's just put this up here so the folks can see it. I wouldn't buy it because I think we're getting ready to go lower in stocks, but I've been saying that since 1953.
The other guy says it's going to 29. You think it pays 50 cents every quarter, a dividend.
Yeah. Well, it could easily go to 59, but right now at 33.
No, they're saying it's going to 29. The other guy that does the late show, so it could go to 29. You think it could touch there again?
Of course it could. That was the low back in 2000 and in 2015 was 30, so it could easily do that. But you've got a lot of things telling you here on this daily that you're right at the right spot. Now, what I would do is I wouldn't buy it until it got to 32 and 32.40. That's the 1.618 expansion of the move from August through September. So that's what I would. 32.40 is what I would buy it at, and then I wouldn't risk more than $1. So you're risking less than 3%.
And it could go to 29. Let's say they raise interest rates. Will that affect all these big companies? It should, but
you don't know for sure. Victor, one thing, if you're going to do this, you really have to get out of it. If you go from 32.40 to 31.40, get out of it, because it could go to 28, or it could go to 29 or even 24.
Really?
You know that American Telephone and Telegraph went bankrupt twice during the 1930s, and that was the telephone. That was the telephone. Look how big a deal that was.
According to that guy on the you had on Friday, he said today was the top of the market. It should be turning down the market, right?
Yes, and the last time I saw him, he was walking across the top of a building. No, I'm just teasing. But we don't know.
I saw a fake print on eno.com at 1,200 for gold. So we're going there because last year it came up with 3 fake prints of 1130, and we did go to 1130. If you go to a website called ino.com and look at gold.
Well, I have my objective down there too. 1,200 to 1,220 is what I'm looking at. I think it's got.
Last year it said 1130. I had 3 fake prints. I printed it out 3 times during the year. It had it, and it actually went below 1130 last year. So I'm telling you, this website's pretty good. Okay,
we'll keep an eye on that for sure. But anyway, make sure if you buy AT&T, make sure you don't risk more than $1. Just 3%. Okay. Put your stop. In fact, if it closes below 31.40, I would get out of it.
Okay, so you think today's a safe bet? The average 2 range is 70 cents. So 32.40 is a good buy point today? Yeah.
You could get it at 32.40, yes.
Okay. I'll wait and see what goes on. Thank you.
But that's with a $1 stop too. Don't forget the $1 stop.
Yeah.
Yeah.
It normally wins 3 times during the day. It goes up. It does 3 drives during the day. I watch it all day.
Promise me you're going to put a stop in if you buy it, right?
Yeah, right?
Pinky promise. Come on, you got to do that. Otherwise, you're telling the market you know more than it does, and the market knows a heck of a lot more than any of us. So keep that in mind, okay?
Yeah, expirations are next week, so you have Weird Wally Wednesday this week, too, on Wednesday, don't you? It'll be Delta
Well, AT&T's not going to be that weird because there's not many people trading it like they are Apple, so who knows?
Yeah.
Someone should have told American Telephone and Telegraph that Apple was going to sell one for $1,000 a piece.
Yeah, I think it's a good buy, AT&T. I saw their cash flow and all that stuff. They ain't going out of business.
Well, we'll see.
Right.
Anyway, my friend, thank you for calling in. I really appreciate it.
Thanks.
You bet. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we've got a couple of markets here that look very, very interesting this morning. First of all, if you bought the wheat the other day down there at that 420 area, don't let it go to a loss. You got a 9-cent gain, so, either book some profit or put a stop in, whatever you decide to do. Don't lose anything on that because it has worked okay and you don't want to lose. Remember Warren Buffett's 2 favorite rules. Rule number 1 is don't lose money, and rule number 2 is don't violate rule number 1. We're going to take a look here at the crude oil contract, folks. This is the weekly chart. You'll notice that we've taken out the highs of the year. In January, we hit 55 and change. We hit 56 and change last night. You'll notice that we have 2 ABCD patterns that are completing there. We're up like 4 weeks in a row. And it's also coming in at a time when we're getting some major news out of one of the big suppliers, Saudi Arabia. I have no idea what's going to happen with that. It shouldn't have anything to do with the supply because most of those guys just clip coupons anyway. But I'm trying to get Bill Meridian to tell me what's going on, but unfortunately he is incommunicado. He's out of the country. He's out of Austria. He's also out of the United States. So we'll have to get him on when we can. But he'll have a pretty good idea because he worked over there for 12 years and he knows quite a few of those folks. So we'll see. They're asking whether it's a potential false break in that oil above the 56 level, and yes, there is. Now, what I try to do is when I'm watching these things, is to define, try to find a little Gartley. Here's what I was looking at just about an hour or so ago. You'll notice that the high we made here in the crude was at 56.27. We came down and we made an ABCD Gartley up in there, and I was looking for it to come down to 565. We did that. Now, what that tells me now, if we go below 55.65 now, that's telling me that there's a better than 50% chance that oil might have topped today and it's not going to make, the 56.70. Because, the difference between 56.70 and 56.30 is not very much when you're looking at a $56,000 contract. So we have to remember that too. It'd be nice if these numbers were exact, but we'll be able to see in that. We'll see. When were these other Saudi people killed in a helicopter crash? No, that would be a little bit too much, I think. That would be more like of a Dan Brown movie. Oh, wow, I didn't realize that. I don't really follow the news very much, folks. The one thing I did do is I watched the ceremonies over in Japan because it was at the Emperor's Palace. And I remember in 1989 they were doing a wasn't CNBC, it was which one? CNN. CNN was doing a big promotion, a big report in 1989. Reagan was there, and the reporter was standing in front of the palace, and he took out a $1,000 bill, which has the picture of Grover Cleveland, President Cleveland, and he put the $1,000 bill on the ground. And you know, a $1,000 bill is pretty much the same as a $1 bill. And he put it on the ground. And he said, "Ladies and gentlemen, that's how much real estate you can buy in Japan for $1,000." I always thought that was really, really very, very interesting. Now, one other thing I wanted to talk about is I'm going to be doing a webinar with, I'm not going to be doing it. John Jameson's going to be doing it. I'm going to be listening in. Folks, John Jameson knows more about the internet and Bitcoin and that kind of stuff than anybody I've ever met. He was one of the first people to get involved with the internet way back in 1993. He took classes. In fact, he graduated from London School of Economics, I believe, in computer sciences for the internet. That was his specialty. There's a big acronym for it, but it's too much for me to remember. But he really understands why, and he really tells us. Well, he learned from Al Gore. No, he really told me why we're seeing here now in Bitcoin is where we were with the internet in 1993. So we're going to be doing this webinar in about 10 days, and you really want to listen to it. He really knows. He really knows. I don't know if you know this or not, but you know that there are 1,200 companies that are cryptocurrencies. Bitcoin happens to be the biggest, and there's a strong reason for that. But there are over 1,200 companies that are doing it. So it's just like the automobile companies. Back in 1929, there were 2,000 automobile companies. Back in those days. So let's just sort of remember that. But anyway, I will get into that because he's really knows the stuff, and he tells me that, and I have to believe him after he showed me the numbers and what it really means. You're looking at something like at the internet. Remember how the internet, we didn't know what it was going to be until probably 1998 or so. And then, look what it's done. It's changed everything. And he thinks the Bitcoin is going to do pretty much the same thing. It's going to be a little different down the road, but cryptocurrencies are on the way. And I think if you listen to it, it's very understandable, and I think you'd enjoy it. One other thing that John talked to me about was really interesting. Folks, we have $20 trillion in debt. Now, just to give you an idea how much $20 trillion is, let's relate it to time. Let's say we take a $1 bill, and for every second, we add a bill until we get to 20 trillion. Do you want to tell me how long is it going to take to get to $20 trillion adding $1 a second? Does anybody want to take a guess? Judge is ruling 640,000 years. Thirsty. Good job, Gator. You're drinking too much of that moonshine, partner. Anyway, that's just showing you, how much debt we're in. And I've always said all along here that we were going to, the old top on the wall, we're having the old beepers coming up. Oh, there's the crude oil getting down to that level I thought I was going to get to. Anyway, boys and girls, let's just keep in mind that, these markets go up and down. And the real problem is not in the stock market. The problem is the bond market. And if we've got $20 trillion in government debt, and then we have auto debt, and then we have student debt, and then we have consumer debt, that's a lot of debt. So, but the trouble is, that's it, Marshals, you done broke the code, partner. You just print more money. Well, if that's the case, we should start seeing some inflation here, and we're not seeing any as of yet. Someone's asking a question about the gold. I think the gold's still going to 1,220 to 1,200, 1,220 to 1,200. That's my guess on the gold. It's not a guess. It's where the patterns line up. That's really what I think what you're looking for. Holy moly, guacamole! I just realized something. Wow, what? Gee whiz. I did the newsletter and I didn't I put it in the commodity section, but I didn't put it in the main section. Here's the one that you got to pay attention to, boys and girls. We've been waiting on this one for quite some time. If you like patterns, there you go. This is Treasury bonds. We hit that 61% retracement back there on October the 25th. We've been rallying for almost 10 days now. We're getting very, very close to the 20-minute line, as you can see. That's right at near the 50%, 61% retracement. I would like to see it take out the highs of early October and then look to be a seller of the Treasury bonds around that 154 level. That's what I would be looking at. That's a, whoa, what do you mean there's no chart? There has to be a chart. I just put a chart up. Cannot be. Don't tell me this. Hold on a second here. Let's get it up here. Oh, there we go. Tell me that came up. Oh, boy. Ah, thank you, thank you, thank you, thank you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've had a request to share some of my old history. You're putting salt on the wounds, but they're good. They're good wounds. They ask, how did I lose all that money during 1974? And how did I lose it? And how quickly did I lose it? I started trading at about 61. My first trade was in stocks in 59. 61, I started trading corn, of course, and wheat and beans, and then later silver came on. Of course, this was 1974. On my birthday, on July the 28th, 1974, I had hit an all-time high. And this is a little country boy from Indiana. I had seven figures in my account, and I only started with about 30,000. And that was the money that I had from the old silver stuff. But anyway, what I did was, I mean, I really thought I was golden. I mean, I didn't know that you could lose. And I was following cycles. Every 12 to 18 days, the market would bottom. This wasn't stock indices. These were commodities, no gold. We didn't even have gold back then. But we were looking at wheat, corn, beans, cattle, cocoa, sugar, all that stuff. And we would bottom for 12 days, and then the market would rally, for 10 days. I'd get out of it, buy it back, 8 days lower. And I did that for several years. It worked perfectly. But then in 74, the market changed. It would rally for 3 days and go down 12 days. Well, I thought, well, it's really cute. I lost a little bit here. I'll buy a little bit more. So I added the losers. And then I wasn't using stop, and I'd add losers to again. And then what happened was I got into October 1974, and they had a thing called the 1974 crash, when the Dow hit 500, I believe, and that's what knocked me out. It was the second or third week in October, and I went to a debit balance of $2,700, and I repaid that, and then I didn't trade for a year and a half until I studied the Gartley book, and then I had the book, but that was the first time I really studied it. But I went back to my college professor that got me started doing all this, and he laughed at me. And he said, "You think you're the only one that's ever done something like this?" And I said, "Yeah." Well, he said, "What you got to do is you've got to be able to understand that not all of these things are easy to do, and you have to go into your and look at your and see the what am I talking about here? Hold on one second here. You see what you did wrong and stop making those mistakes." 1 second, folks. I have to turn off the beeper. There's something going on. Oh, it's the crude oil again coming down here. If this crude oil gets below the 20, shucks. Bear with me here 1 second, boys and girls. Otherwise, I got a problem that I can't fix. That's the trouble with these alerts, and you're doing the show. Can someone tell me where Apple opened, please? I would like to know that. Shucks. Oh, these beepers. I'm just not capable of walking and chewing gum at the same time. Okay, let's look here. All right, thank you very much on the Apple. I appreciate that. Okay, now I've got it taken off. I posted a chart here going back to the time of Andrew Jackson. This was the U.S. Bank number 2. This was the Second Federal Reserve Bank, which was in 1835. All I want to do is to see that you're looking at something that is telling you that nothing's really changed, folks. Look at this time period. I mean, this was before the Civil War, right before the Civil War, and you can see the patterns. You can see the ABCD patterns. You can see the retracements. So nothing ever changes in these markets. What goes up, comes down, except for stocks, and then we'll see what happens, from that level. But anyway, that's really what's going on. The only thing, someone's asking me about any advice they would give you. Well, the one thing is you want to do is you got to have a belief system that you can actually do this. And the only way you do that is you got to prove it to yourself that you're able to, to trade. And the only way you can do that is you have to have a methodology. But it's a 90% mental game, folks. It really is. So just keep in mind that it's a pretty big deal. So watch it very, very closely. It's going to be really, really interesting, as we look at some of these things to see what's actually going on. Okay, now one other question someone's asking me. It's about the NASDAQ. Yes, the NASDAQ is at a new all-time high. Just made a new high, and the YM is getting ready to test a new high. We still haven't made new highs yet in the Russell, but that could be later today. This is almost what was it? The anniversary of the election was a year ago, the 8th, wasn't it? When the Dow was down 800 points that night, right until he took over, until he won Florida, and then everything turned, and the world wasn't going to come to an end, and it turned out to be a pretty big rally in the stock market. So we'll see what's going on. Yes, you're correct, Dudette. 6320 is a really big ABCD on the NASDAQ on a daily basis. and it could very easily. It's a very clear one. As a matter of fact, I think I have that one, God willing, and let's see if she is. Yep, I do it. Hold on 1 second. Let's see, 1 second. We'll get this up here so everybody can see it. And you'll notice that's at a 1.618 expansion also. So that'll be a interesting one to watch today as we look at this E-mini. The Dow Jones has already done it, but we'll see if the others are going to if they're going to do it. So one at a time here. All righty, I have a question here from somebody else. Oh, by the way, when we were looking at this is what the beeper was doing when I was getting this on here. Hold on here. Oh, shucks. Oh boy, I tell you. Yeah. You'll notice that this was the objective that we were looking at. We just hit that 55.65. That was the beeper going off in the crude oil, saying that pattern had completed. Now, remember, folks, if you're trading a 5 or a 10-minute chart, you trade the 5 or 10-minute chart. Don't go switching to thinking that, oh, maybe this is the high on the weekly basis. Don't think of that. That's not the way you do it. Trade the time frame that you're in. Don't cross your time frames. You'll get in a lot of difficulty, and it'll be very, very frustrating. And I have the scars to prove it. So if you're trading a 5-minute chart, trade the 5-minute chart. 15-minute chart, trade the 15-minute chart. Don't switch back and forth on the different ones, that we're looking at, because that's not a lot of fun, doing it. That's the main thing. We got a nice chart here from our good friend Ed Carlson from the Seattle Technicians Association, and I wanted to bring that up here to let you folks see it. This is a chart of the conference board, showing you where we are. We've touched levels that of course you can see the .com bubble there, but you'll notice that we have exceeded levels from the 1974 high in the stock market and also the 1987 high in the stock market. So we are at good confidence levels, as we should be, because things have turned around. People are going back to work. They are spending money. You can see it, in the automobiles. You can see it when you go out to dinner. I mean, there's now, sometimes you have to wait at some of the restaurants. I always have to wait at my restaurant because I go through the drive-through at Mickey D's. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we have a caller, I believe, from Philadelphia. John, are you there?
Good morning, sir. Thanks for taking the call.
What can I do for you, my friend?
I am in desperate. I called last week. Told you I was in desperate need of help on the euro. I'm calling today to tell you I'm in desperate need on the bond futures, ZBZ7.
Yes.
I saw an obvious trade early in September up near 158, shorting it, and made some good money coming down. But for the past 3-4 weeks, I've been very careful on trades. I think I've done 3 or 4 net a scratch, and I see so many possibilities that I'm confused. I don't see a trade. I'm wondering if you see something clear that pops out in your work. I'd be much obliged to see it.
Well, I have good news and bad news. I do see something. The problem is that I don't know if it's going to work or not, but it's as clear as anything that I've seen. Let me put this up here to take a look at. It's got everything that you could look for. Remember we had that Fibonacci number down there at 50 and change, 50.15, hit it right on the money. Now we rallied for 8 days now, and we're approaching the 50% retracement that comes in almost at an exact 20-man line. Now, if you take a look at the chart that I posted in there, and, we're up 8 days in 8 days in a row today. So I would think if we can get this thing to just a tiny bit, we've hit 54 and change already today. How much high? What was the high today, John?
I'm looking, it was 154.10.
Okay, well, the 154.12 is the 50% retracement, and you can see the 20-man line coming in just above that. So this is where you'd want to be looking to be, start a selling program, because you're up 8 days. The odds of the market coming down is approaching 70%. So that's a lot of things you got going for you.
God bless you. I knew if I'd call you, you'd see something that I failed to see, and I will tell you, it's the obvious tool that you employ and you draw on your charts just routinely is that 20-man line, and I forgot to draw that in. Look at it. Look at where that shows up. That's beautiful.
Yeah, that's right in there. So I think that we're up a half a point, half a handle today, which is quite a bit. I would have to wait for that 54, take out that 54.12 area, and then look to do it, But you got to risk, from that level, you got to risk probably about a half to 3/4 of a point to see if you're going to be right. But the long term, this thing is very bearish, John. I mean, bonds topped, a year and a half ago in July. So, rates have been going up, but just Federal Reserve hasn't got the message yet.
Yes, indeed. So thanks so much for sharing that setup and those features. I can see that low risk short. Ideally, if it gets up to 54.16, 54.20, not risking very much. Terrific. Can I further just ask you about the gold market? I listened with interest your thoughts, which I appreciate you sharing. You shared in the first 30 minutes. And very specific question. We all see the Fibonacci 618 support down at 1263. That was tested October 6th. It was double tested October 27th. And then last Friday, that's November 3rd, we got down to 66. Well, we're pounding that Fibonacci support. That's true. And it's not holding any bounces. That's true. But the fact that we haven't broken 63 decisively, to me, suggests buyers are just lurking, waiting there, and that I shouldn't be surprised if we launch higher from here. Do you see things differently from that idea?
I don't think we're going higher for here because of a couple of reasons. You know, the correlation between the euro and the gold right now is extremely high, and euro certainly looks like it wants to go lower. And so I would have to think that we would be looking at something that would tell us that we're going to get down somewhere around the 1220 to 1200 level in the gold. Now we're $50 away from that level, but you know, $50 in gold isn't very much. Now this would all change if we could get above 1290. If we get above 1290, that would exceed the last rally that we had, and that would tell us that we're most probably getting ready to go. Because silver, you know, silver held the 61% retracement on the long-term weekly chart, which was, you know, quite surprising considering gold was getting hammered, and still did, you know, silver had great support there. So there's still that chance, but I think you've got to get it above that 1295 level in the gold, and then you'll have a better chance, you know, to see the thing work.
Very good. Yeah, thanks so much for sharing that thought. And as always, you always share something new that I failed to look at. In this case, I'll just repeat, it's that 20-min line on the bond futures chart. So thanks a bunch. Much appreciated.
Well, much appreciated for the work you do for TFNN, Z, because I watch all your posts, and you do a fantastic job. So we're going to let this one thing slip, but if it happens again, John, you're going to be reprimanded. So just be aware of that, okay?
Very good. And lastly, I like that wheat trade that you identified late last week, and it's starting to work. So kudos to you there.
Well, have to get one right. You got to find that blind. The old hog has to pick a blind acorn. No, the old blind hog has to pick up an acorn once in a while. That's what they say.
Squirrels or hogs, it makes no difference. Right. Thanks so much.
You bet. Thanks for calling in, John. We really appreciate it. Okay, folks. Now the next thing we want to do is to we've got another break coming up here. Wow, show's almost over. Regarding the crude oil, we went down and we made that target. You know, we're just bouncing around here. There's still an outstanding target in that crude, 50 cents higher at 56.70. I don't know whether they're going to get there or not, but if we close badly today, we get below that 50, 55, 60 level on a closing basis, that could be a false breakout in the crude oil. So remind yourself that that's pretty much what you're looking at. Now, in the middle of the night last night, we had an interesting pattern here in the Dow Jones E-mini that told you that it wanted to go higher. Now we're up around the 23,485 right now, so we're very close to a new high. We made a new high in the NASDAQ, and we made a new high in the S&P. But this was, Sunday night. It completed an ABCD pattern right near a 382 retracement. So that said, there was some pretty good support coming in here. But like Mr. Winsky mentioned, there's a high probability that we got some stuff that would tell us to see the thing is going to turn down. Whether it will or not, we really don't know for sure. But we can tell you this, that we did make a new high in that E-mini NASDAQ. We were looking for 63.20. We've been to 63.08 so far. The Russell hasn't done it. Actually, the E-mini S&P hasn't done it either. So I'm not sure if that's going to be the case or not. But, I think the better trades today, folks, is to, keep an eye on the crude, because that could be a pretty major top in here. And that would be an interesting to watch. And also the bonds, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I tell you, all of my frustrations in this business are due to the computers. I lost all my data on my major watch list. I don't know what happened. I didn't do anything differently. It's just that it's disappeared. I imagine it's hiding behind something, but I don't know. Let's take a quick look here at the VIX, because we've had a little bit of a movement today, not enough to even count. But the main thing we want to take a look at here is that we've got, you can notice here that last time we've had full moons, we've had some pretty good moves here. And we did have the full moon over the weekend, and we're a tiny bit higher today due to, I don't know, tensions or whatever. But I'll tell you, of all these years I've lived, I'm certainly getting frustrated what I see in the news. Boy, it's just really a sad thing to see stuff like this that's going on. I wanted to share one other chart with you, and that's from our good friend Jim Bartolioni. We'll put it up here. This is the stock of the Dow Jones Industrials, and it's on a, if you'll notice that he does a lot of work with music and how it relates to harmony and stuff, and you notice that this is what we're looking at here in some of these things. What's interesting about this, if you look at the lower left-hand corner there at the bottom of the chart, look at the 1987 crash, folks, and how insignificant it was. Hello, even the drop into 2009, look how insignificant it was. But things are different this time, so we'll have to wait and see, what happens as we go through and look at some of these markets. But anyway, yeah, what do you need to understand in today's world? I guess it's no different than any other time. It's just that the news is so instantaneous that you really don't understand it until they tell you what it's all about. And even then, you can't believe 2/3 of what you hear. Remember, folks, the euro still has some price level to the downside. I believe we're going to get down to this. We'll put this up here to show you. This is where you want to take a look at the gold if we get down here. Hold on here. There we go.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.